Welcome to TradeTheMBI.com. This is John. This report is for May Day, the big 1st of May. The communists will be out in force celebrating the proletariat and the condemnation of what we're doing here, which is the speculation in the markets. However, it is that very speculation that provides the ability to actually, do pretty much anything. So here we have the famous cup and handle situation, and we talked about this. You had the positive steel rising as well as the green over red and the orange reset with this lovely dip below the red line here, which means that any pop likely to retrace itself coming back. We started with improvement here with the shakeout, so everything was starting to look fairly decent. You can get the little yellow candle. The difficulty was that didn't have a significant dip. The last time it really becomes a powerful catalyst is seeing the shorts when you get this cyan reading down here at the negative 6 1/4 range. And that really produced the last significant move that took us up to this point. We've retraced the 50%, but we got a little bit of distribution within that, and all we're doing is basically trying to revisit that 26 single-digit range down here, right at the bottom, right around 14-12 area, and it's still not horrible from a long standpoint in the sense that you still have green above red. The issue is no short-term buyers, and they're not ready yet. They don't come in for another couple days. So maybe by the end of the week is when they'll show up. But NASDAQ is looking pretty much identical to the S&P, so we're not that far out of range, though I would think that the readings are significantly stronger from the NQ standpoint this particular time. And the euro giving up some of it, and that's putting pressure. People don't take that into account, but the excessive weakness that was in the EU is putting its weight, because that dropping euro is impacting the value of S&P earnings overseas, and that's more of a catalyst than anything. However, when we look at the intraday chart, we're going to see the impact of the news from Israel really caught the market off guard, and that is what was the catalyst for the dip that we saw. Treasuries rising is a defensive thing, foolishly so, but then again, the numbers coming out for U.S. growth weren't exactly stellar, not in the 3% range, so certainly not doing anything. For the end of the world coming out with Israel's talk about Iran continuing its nuclear program and the likelihood of us pulling out of that deal and things, should have produced more of a spike? Well, it's just rhetoric at this particular point. However, I think some of this has already been priced in a little bit going forward, because the reality of it is they're not seeing any disruption of supply at this particular point, nor has there been the provocation that we've seen years past. So there's a bunch of talk at this particular point, though I think it rattled the markets because it was something that was not known, and that unknowns usually cause disruptions. Gold, you would have thought, would have spiked. This shows you the heavy hand that's keeping it under pressure. But then again, we really aren't seeing that labor constriction that justifies gold taking off yet. So these are other things that you have to weigh into. There was no safe haven in cryptocurrencies from the recent highs. Bitcoin's traded back down below, right back now to 9. We had that big boost after George Soros. Well, here was the intraday. That was this an exciting setup. It started off fairly modest here. We ended up with a couple of nice little openings, and this is where I did the video report from before. In fact, I can enlarge the screen one, so we don't need all that other data. And sure enough, popped up, made the highs. Then we got the gold, which indicated, touching the highs, and it was right after that and this is an interesting characteristic that I like to, I haven't really pointed out much. When Cyan moves below red. You've created a bit of an inverse relationship. And so when steel dips below 13.5, you actually have effective short signal. However, you need to see green below as well. And that took place right about here. The more traditional follow-through signal would have been right about here. But in that inverse play, you're actually bullish, coming right out of that negative 13 at that particular spot. However, at this particular point, we ended up with, a nice solid decline in orange, which tends to be a bit more bullish when you had a bunch of back and forth going through there. And then the classic double top, which faded back down to create classic triple top and all these lovely patterns, because when the first one doesn't work, you got to call it something else. I always love that. But then we ended up, here's that beautiful snake that we talked about earlier. This actually is a snake with the alien. So you have the snake being the opening of the mouth where you've met with steel and orange coming together. Then they separate, so it forms there, your tongue being the cyan. However, within that same situation, you also had green falling and cyan opening up with the red becoming the tongue, and that is actually the more powerful. So it's like in the movie where it opens the mouth and that second mouth comes out. And it produced a decent little dip, but immediately got bought back up. But the beauty of that one was easy to see that we were going to retest those lows, was the dip of the red line right here. And did we see cyan dip below 7.5? Nope, we did not. And then we got over to the secondary setup, which was right over here after what should have been much more bullish with the dip of below. The right down to it, 6.52, so it's like right just a quarter of a point to what you're looking for. But this flat line of the poor red just ceased to move, and then we dipped below the 50%, and nice little tiny mouth opened up right there, and pretty quickly got closed off, which usually is a warning that things are about to change, and then you look for the steel to cross. And in this particular case, it did so, but the separation between the red and green was so large, and this continued distribution through there puts you right back into a situation over here where potential of the first earliest pops were taking place. But when you have this much damage into there and the revisits there, you're not going to get a whole lot. Even if this pop, the best I was going to be hoping for would be 23% or something. And that's the last, though. That's what this, not magenta, but it's purple, represents that last dip below the, and then sure enough, came across two bars, and then we did it again, suggesting that we're going to, and that's when it turned into the white candle, which was very interesting because we know that this one's going to be very short-lived, and then it's going to retrace into the weakness. And the first buy setup, and this was one that was even talked about in the Skype chat, was right here. So right in the midst of all that was this first dip of the orange for the bullish, and you look for it to carry through, coming down, and sure enough, nailed it very close to the bottom, 26.55.75, and it shot up like 5 points like instantly. It was like super fast. Didn't last because we still had to work out some of those dips, and came back here and here. And so this is what becomes difficulty for a lot of people, because from that early entry, it's not bad, but it only goes for a couple of bars before it starts to fade, and that's that initial signal right here. And plus, you're so far away from the negative 13 line, you need to be within a range that within a few bars you can actually reach. And it took until, right about here before you broke into the new zone, which suggested that there would be some better bullishness. The problem was you had rising orange, but as soon as it turned down, that's where it caught the best ride that it had until you ended up with a very weak setup here where the green had already faded below, and it was just a matter of waiting for the continuation of it, because this was an interesting one, because if you follow the cyan here, cyan and orange caught between the two, it just sort of created this continuation lower. So even with the pop, we weren't fooled by what was going on with that setup there. And then sure enough, opened up again to shortcoming, but that cut off pretty quick. But again, you ended up with lovely little, this represents the Azure rising, and when Azure rises at the lows, it rarely tends to do anything but just kind of trade sideways, and that's kind of what happened here. Never broke above the 23 throughout all of this. And then right after the market closed, we ended up with a nice spike that took us to the peaks, and then after, well, actually that was still within market. We ended up with another spike here. This was happening early hours, but again, same situation. This deep separation, far from 13, no dip of the orange even below, and no significant dip until right here, which created the pop of the cyan down to the 7.5. So it becomes pretty clear when you see these shallow dips, and particularly when that cyan stays above zero, it's very hard to get traction to the downside, to an upside turn. It tends to be a continuation weakness. So following all this was quite an interesting change, and it all sparked with that breaking news, because what's the incentive to buy when there's conflict? None, and that usually causes people to be thwarted. But it's interesting because some of these additional setups are going to be put into there, so this would end up staying, well, pretty much within the white category, which will just be more continuation red, and then all of a sudden you'll see this turnaround, and you might be surprised as to the why, but these will be the reasons why it creates this situation. Plus, we'll get into later on as time goes the differential between higher peaks and lower peaks. So higher peaks of steel tend to be more bullish than lower peaks, because as you get lower peaks, you end up breaking down in price. Likewise, breaks at the low, and so this is where things that you can see intraday. It gets a little more complicated that way, but also helps for managing stops and that, knowing when to adjust to tighter ones versus a little bit looser. Overall, still, that trend of the shakeout really calls it negative. Shakeout is bearish. We just look for these lift-off points, either as points to cover or just to take a little bit of an extra pop at a couple of points. It just depends on how aggressive you want to be, but it gives us a pretty clear idea. This still looks weak into this market so far. Nothing's built up. We've had the rising red. It's starting to do what it needs to, except for the fact that you're just not getting any strong strength from short-term buyers, and that's why this is continuing to cascade. And you can see it just literally ends right there as soon as it breaks below the 13.5. And actually, we could look at the numbers: 1273 here and 1294, and then by the next bar, you're well below that, and that started like very early on it. And you know at that particular point, once you've started to move below this level, that you're going to get nothing but softness. Now, you still popped up several times, so it wasn't like you were trapped or anything. It's just that you could see that bias was continuing to go to the soft side. Rising orange wasn't producing anything, and this was the bar that you would have expected a dip down that would have driven you up, but it did not happen. Instead, you came straight up, and once you took out this level, that led to the next precipitous drop. You see, so and in the program that I'm working compares these peaks and those levels to add to the ability to see where price is likely to head to even before it does it. So that's the exciting aspect of it. As always, though, we will continue to put up charts, and I will display these kinds of situations as they pop up. Trade well, and ready for an exciting month.